The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour this Tuesday, the 22nd of April. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time. 877-927-6648 is the number to call. Don't forget those Tiger dollars. You can't miss out. You get those Tiger dollars and you get a bonus. So consider it, please. And not only that, if you are getting one of our subscription services, that is a great way to add a month or more to your subscription. So consider it, consider it. Question in the den. Basil, looks like SPLS is making a bit of a move. Your thoughts on where it is headed? Okay, got in a few days ago, 12.13. That's Rob. Okay, I'm going to look at SPLS at Staples. In fact, you know what? We'll do this very second. We'll do something a little unusual here. We'll look at a stock right away. Yeah, making a it's up 4 cents. I looked at this and I said, wait a minute. It's had the narrowest 2-day trading days, Staples. The 120-minute chart is starting to show a little bit of improvement because the stochastic is higher than it was previously. I almost took a little nibble at it again for subscribers. And, you know, let's give it the day. You're in okay. I would just say to you, make your stop. Be reasonable, make your stop. At 11.83 was the low of 4 days ago. 11.81, somewhere around there. Just don't get too carried away. Don't let your thoughts dictate what the price is going to do, because the price right now is sitting in the 9-period moving average, but not going up or down. You're saying, you know, I'm thinking. I'm not doing anything yet. I'm thinking, and I've got a big rectangle, but I've also got a little rectangle, and it's right there between these levels, and that's at 11.83 level, and on the upside, it needs to break 12.19. Yeah, 12.17 was the high, so it's got that rectangle to complete. If it pushes above, then I say, great, now it should head towards the 12.30 to 12.40 area, and that'll be very nice action. It'll be a startup action, and we'll do that. That's also another couple of questions. Yeah, we'll just do that. The next question was IBB. IBB is having a fabulous move off the low. In the 120-minute chart, the NASDAQ, iShares, biotech sector is in A, B, C, so it still has D to go. Came off the 202. Was it 202 low after being up at 275? Yeah, 207. Sorry, 207.48 low. Let me put that in, 207.48. Oh, I wrote that in. 207.48. We'll put it into the 120-minute chart. Nice move. This is a 27-point move, 12%. We are fortunate in that we have a short position in my opening call from way absolutely at the top and almost at the bottom. What we did is we went long the 200%, so we're actually in a bullish position overall. But longer term, I believe that this will be coming back down to test. So IBB daily, let me just look at it. IBB, yep, right at a resistance level. Got so many of these, and I change them all the time. 32, I thought. That was a 32-period moving average. Resistance, the next one's the 50, and then 50 is at 238. I'd said that my target was possibly the 238 to the 242 level if everything comes right. That's kind of what I'm sticking to. Yes, that downtrend line, it's going to be tough to break it. First shot through at 242. That might be all she wrote. I don't know. I need to see how we close today, how we go into the next couple of days. Look how it came off that support line. Beautiful. Right at the 9-period moving average resistance in the weekly. Yep, if you're long, stay long. Be prepared that there could be a pullback. And then we get the real test. Does this pullback make a peak A and then start a leg B up? And if that leg B is just very minor and then pulls back sharply, that's over. If it's quite big, that's very positive. This could be a low, a significant low for 6 weeks. Who knows? I'm hoping we play it for whatever time it is. So now there was another question. All right, DDD, let's do that. So we're changing the format a little bit. Look at that beautiful left side, right side price move, almost to the week. I'd drawn this in ages ago. I forgot to look at it. It hit it exactly. Went right to the level that I was looking at was the support at 44.50. DDD is 3D Systems Corporation, manufactures and prints 3D objects. It went right down to the 45.29 area. Nice leg off that doji low. Yep, this could be a bounce that takes it from 51.83, 50. Let me go one step at a time. 51.83. So it's the ugly candle that has got to really be tackling, and that's the one that goes to 54.88, the one that gapped down from the open on the 10th. I know it didn't gap down. It opened up reasonably, and then whoosh, on the 10th of April, it went from 54.88 down to 48.51. So that's going to be the challenge. And I'd say the low of the 9th, which is at 52.83, that's going to be the next resistance level. But so far, you've got left side, right side price time match. I'm expecting kind of an arch formation. Monthly chart has made a peaky. There's a serious blow to the stock. So where are we on the New York? Oh, everybody's getting in there, huh? Okay, I don't mind. That's what we're here for. And we've got New York Stock Exchange is up 40 at 10,599. That is really important. It's getting closer and closer. It's in the middle. It's in that wick bar. The bar that hit 10,669, the all-time high. I have to tell you, this is very impressive action that I'm looking at, especially with the VIX down at, what is the VIX? Down at 12.95, in the 12s again. So that weekly bottom, I have no choice. I have to call it a B. If we break above 10,669 in the New York Stock Exchange, that has to be a C. That's positive. Has to be going higher into May. The old song that says, riding high in April, shot down in May. Let's go to Freeman in Dallas. Hi, Freeman. How are you?
Pretty good, Baz. How are you doing today?
I'm very good. Thank you.
Hey, Basil, could you look at the IWM? I bought the TNA calls when we were going down.
Yes.
I bought the 68 calls. They are up 100% right now. They're
nice.
They expire in May. My question is, I'm looking at that IWM right now. It's going up, but you see the slow stochastic, it's not confirming the uptrend. What you think about it? Should I hold on to it because I don't want to lose that premium? What you think?
Okay. There are a couple of things that I'm going to suggest you. I spent a little time on this IWM last night looking at it and deciding whether or not it is still what one would call a lagging former leading indicator, or whether it is now participating, but because it dropped so much, the participation, excuse me, a little sneeze there. I forgot. I got a little button on my headset, but I forgot to press it. All right, excuse me, got a little sneeze there. And now this we've done is we've gone from the IWM, the all-time high so far is, I typed that in, but I haven't got it in right now, was 120.58. So let me type that in right now. So when you go from 120.58 down to 108.66, 12 points, that's about 10%, but you do it in that pattern that I call an uppercase A, Eiffel Tower, straight up and then straight down. But you don't take out the left side low. In fact, you use that as a cushion and then a trampoline to spring back up. That's usually good for at least a 50% retracement. I'd say that I couldn't make that an absolute rule. Thank you. I got all the God bless yous and bless yous in the den. Yeah, thank you. You can't make, but I would say that the candle of the 11th of April with a high of 115.25, that coincides with all the different moving averages in the daily that I'm looking at. So this is what I'm going to recommend. I'm just going to grab the 120-minute chart and do a quick Chapman wave notation on it. Right here, so it goes, I just need to check to see if that was a higher high. So 109, 111.53, 157. Yep, it was. I thought so. So that's A, B, C, D. So this is E in the 120-minute chart. It tells me two things. Well, I'm going to, if you don't mind, I need to just double back for 1 second. I need to explain to you why I'm thinking what I'm thinking. The action on the candles that we've seen in the Dow from the low bar of 16,015 made on April the 11th. I better put that in because I keep forgetting what the date was. The April 11th low says that with the doji candle of 3 days ago, we might have a halfway marker, and that says 16,015 to 16,460, 460. So that's, let's call it 440 just for arithmetic purposes. And arithmetic purposes says that 16,368 plus 400 takes you to, whoa, 16,770s or 16,810. So that says there's a chance that if there's a one-to-one move to the upside, the moment we break 16,631 in the Dow in this particular move now, because we made a lower low than the 16,046 low of the 14th of March, means that this is really a fresh leg. And I have no choice but to say that in the, whoops, there was a mistake, 1640. This is actually leg B. So this is A. It's leg B right now, and I should actually put it in dark blue because this is a fresh buy signal that is probably going to a buy mode as we speak, regardless of the stochastic and the MACD. I have to think of it that way so as not to confuse myself. That's number one. Number two is if you look at the candles from that low bar, except for the doji candle, we are in fact looking at if the day closes anywhere around here, even if it closes instead of at 16,532, closes at 16,500, it's still a pretty nice white candle as opposed to those black candles going down. And that says, this is because there's a white background, and that says that the weight of evidence is saying just at this particular time that the strength is on the bullish side. If you look at the volatility index, which made a lower low, it's trading at 19.97. That, in fact, is a negative. So we're going to a break. I don't know if you can hold on. If you can, I'd like to just finish the thought. Can you hold on?
Yes, sir, I can.
Okay, great. So far, everything's positive, and I'll finish it up when we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So while I was doing that, a couple of questions in the den, which are all pertinent to exactly what Freeman's asking about where are we going higher? That's really the basic. All right, Freeman, are we going higher?
Yes.
So the issue now is that the VIX index has done almost a full retreat to a peak F, top in the 120-minute chart, to a trough E. Well, it's not a trough E yet, it's still a leg E. The big target would be 1260, the left side low bar of 11:30 in the morning on the 4th of April. So the stochastic is flat, no strength there yet. MACD is still expanding. I'm looking at this and I'm saying we are getting close in the daily chart. Now, the diamonds went to a leg A and extended again today. The Dow is in leg B because it made a fractional peak A with yesterday's slightly lower high bar. So now, when I'm looking at this, I say to myself, all right, let's go back to the IWM. And the IWM, the candle right now is just a beautiful big green candle on this background that I've got at this particular point. It's getting close to resistance. So the question you're asking actually has a bunch of meanings to it, because on the very short term, it would be just absolutely obvious for me to say to you, look, the 120-minute chart is in leg E. Once it gets to about 140, it's at 114.51. The moment it gets to around about 114.90 to 115.25, then the magnet of the 200-period moving average of 115.60 would be the basic target that we'd have. That's looking at the shorter-term trend. So I don't want to disturb a position of yours if you were intending to try to buy it and hold it. Now, what I'm going to ask you is this. If you have enough, I would suggest that as we are right at this particular point, when you get an option that goes to 100% gain, it behooves you to always take something off, because it isn't usual that one has the patience to sit through that kind of acceleration to 100% gain, and then you don't have the patience afterwards, because what happens is if it starts to pull back, your mind is saying, oh, 100%, now it's 85, oh, now it's 75, now it's 60%. So I'm going to recommend you take something off. That you take off allows you to say, you know what, they're supported 113.23 in the IWM. If there are already good signs at the close today, especially the fact that we gone up after that doji from 2 days ago, I'm looking at this and I'm saying, it looks to me very much like we want to try all-time highs in the Dow and the S&P. The IWM should follow. So here's my recommendation. Take something off as we're speaking. I think this is a good place. That's what you would think of putting back on any sharp retracement that makes a peak A in the daily, still trying to analyze whether or not this is just a bounce. So far, what I'm looking at in the IWM, the iShares of the Russell 2000, is that it looks like it's a bounce, and it looks like it's going to fail and come back down, probably in May. But in between that, it's got about another 1.5 points, maybe even 2 points to the upside. Then I'd get very cautious. So over 2 points, when you've got 100% gain, I'd rather put that back, a little bit back, after taking some profits on a pullback with a fairly tight stop on that position. So that's what I'm looking at. Does that help you?
It does help. Thanks a lot, Basil.
Okay, so 113.22 is the 9-period exponential moving average in the daily, and 113.23 is almost the same level on the 120-minute chart. I suspect peak A won't go down there. It'll be fairly shallow, and then you'll get leg B. That's the one that we've got to watch real closely. Hey, thanks for calling, Freeman.
Hey, Basil,
yes.
Could you look at Starbucks when you get a moment later on the show, please?
I'll put it down, and I almost forgot. Yesterday I was asked about Tesla. I'll try to get to that. Hey, thanks for calling, Freeman.
I appreciate you. Thanks, Bobby.
Appreciate it. Thank you. Let's go to Nick in Oklahoma City. Hi, Nick. How are you?
Good. How are you, Basil?
I'm very well, thank you. You'd like to look at?
Plug Power. It's a speculative.
You know, this is such a volatile stock. Plug Power, folks, PLUG, great symbol, trading at 6.629, down 39 cents. That's 5.70%. Do you have a position?
Yeah, I just picked up some.
Okay, now, are you in the money or out the money in the position that you have?
I'm about even, maybe just below. Yeah, just slightly low. Yep.
Okay, so here's what I'm going to recommend. Because of the candle that was made in the weekly, which I have termed peak F, whoa, that's a break game coming up. I'm going to suggest that you be real careful. So I'm coming back after the break, and I'm telling you what I'm going to be looking at for Plug Power, but I'm saying be real careful. I think it's coming back down, and you've got to be watching it very closely. I'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, folks, we're on right now with Nick in Oklahoma City. We're looking at Plug Power. PLUG is trading at 655, down 45 cents. Now, this is what's so important. Nick, the reason why I'm suggesting that you know, if you have this as a long-term buy and hold, my suspicion is if you're prepared to put up with a 30% loss at some point, there's going to be a spike. It always has a spike. It should have a spike back to the 8s at some point. But right now, with the D that's made in the monthly chart and F that's made in the weekly chart, getting close to the 9-period moving average support in the weekly chart of, let's see what that is. I think it's 640. No, it's 641. And the daily chart is pulling back very sharply in a rectangle formation, which says, because it's taking out the low of 653 right now, it's at 655. It has already today. Oh, it hasn't taken it out. So if it takes out 653, my only concern is there's a rectangle formation that's unfolding here, and it does say that if it takes out the low of 655, if it gets to say 651, there's just a really good chance it's going to test out it could even go to 621. The middle part, almost the middle part of the rectangle, could even go a little lower. So I'm recommending to you on the shorter term, I would lighten up. You know, if you're asking me what would I do, I'd say, yes, it could go higher, but at this particular point, I'm real close to saying lighten up. I don't know whether by 1/3 or 1/2, but I would lighten up right here. I wouldn't want to take the chance. Why? Because, yes, it could bounce back and get to 702 or 703 above the 9-period moving average, but the action after the candle yesterday, this is very negative, and if it keeps going down, the MACD and stochastic are not good at all. So if you're a long-term buy and hold, I'm just saying to you, it could go down as much as 1.5 points even, or maybe even a little more, and then form some kind of a base, and then have a rip-roaring move back up again. But I don't like to hold things that are going against me when the chart pattern says, whoa, to turn around, in this case to the upside, would require a lot of energy, and I just don't think at this particular point it's got it. So I don't know what your longer term may, and if you have some fundamental thing, and maybe some news is coming out in the next week or so, I'd say that's different. But 627 is the 200-period moving average support. It better hold that, or it's in real trouble. So I'm just a little concerned only on the patterns that I'm looking at. If you're looking at it fundamentally, maybe the fundamentals will change the pattern, but physically what I'm looking at is that it has broken serious support today by gapping down, and it doesn't look that good. I don't know. What's your longer-term plan? Nick, are you there? Oops, I think we might have lost Nick, but I'm sure he's listening. So, Nick, that's my strategy right now would be to tighten up a stop. If you have one, if you're just about at break even, I'd say, it depends on your thinking, your outlook. And as I say, you might have a fundamental aspect that is maybe stronger than the technical one. But technically, it does look weak. Technically, I'd be taking off some right now, in fact. I'd be prepared to put it back if it shows strength over the next 2 days, form the rectangle formation, and it says, okay, I'm now on my way back up again. But right now, it's just so close. I'd probably put a stop at about 653, 651, and it's at 657. So that would be a stop on some of the position. And personally, I would clear out of the whole position at that level. But if you've got a fundamental story there, I don't want you to change your fundamental thinking. I just want to give you the technical parameters. So I hope that helps you. So I'm not sure if you're there. If you're there, just shout, hi, I'm here. If you're not, that's my recommendation at this particular point. So thank you so much for calling, Nick. I appreciate that. Now, I wanted to do a couple of things. I had a couple of calls, a couple of questions in the den. That volatility index, let me just show you the volatility index, VIX. It's getting close to some kind of support here. And that support might be saying, it's only support to test, it's not going to hold. Or it might be saying, you know what, we've had a spectacular move in the daily, but I have to tell you something about the daily chart that I'm looking at. If I go to, not the daily chart of the VIX, the volatility index, the daily chart of both the Dow and the S&P. I spoke about the Dow. Let's go to the SPX, and I'll show you something here. SPX and the daily is making leg E. It's almost back to the highs of 1897.28 made on the 4th of April. The MACD is good. The stochastic's at 98%. How much better can you get? And the daily barely had a doji candle. That was kind of a wide doji. Great action today. I like it. One of the reasons why we're almost totally long in my opening call is that I've been liking for a week now. I've been liking the action. And I didn't want to fight the action. Did I know that it would be as strong as this? I didn't really know, except for one thing. I've been talking about it a lot, that those momentum stocks that were faltering so badly, especially the biotechs, if they found strength, they would support the S&P and the Qs and a little bit of the IWM, and that could allow for a buffering effect to push prices a little higher. So now it's a lot higher than I anticipated. We're into the ugly candle in the S&P of the 4th. Remember that Friday? Now, a question I had here, a date with the weekly, so that would be A, B. Actually, all that would do is if the S&P went to 1897.29, would start leg C, A, B, C. No, it would be a D, correct. Absolutely correct. So that would be EFG, and then A, B, C, D. Wow, isn't that interesting how it finally unfolded? How these things work, I just don't know. Now, the question is, Maxwell, MXWL, was a spectacular. So it was one of Dave White's recommendations some time ago. I'm not sure if he has anything to do with it right now, but it's in leg C in the daily. It broke that cup-shaped pattern is a powerful, powerful pattern. We spent some time on it during my last Master Trader series and a couple of weeks ago, and that shows you the power of that leg C. Now it's in E in the weekly, and it's in a whopping leg B. It's almost like it's more than a measured move to the upside. A leg E, yep, a leg E. I'm sorry, leg E there, and a leg B in the monthly chart. Maxwell is cooking. Maxwell is, in fact, Maxwell Technologies. I can't remember what they do. Lovely action. It says that the support now is the lip of 1615 at that peak E high in the daily on the 18th of March. MXWL is trading at 1644, up 63 cents. And no, I'm not going to say that. I'm going to say that that is a support. The real support is at the low of today at 1544 to 1466 in the 9-period exponential moving hour. I'd much rather give you a worst case than a best case scenario. That once it's broken out in the Chapman wave, this is a Chapman wave cup and ladle breakout pattern. I wonder if I've got time to talk about that. Cup and a very unusual pattern, and that says that it should go to at least D. That's the rule of this particular pattern. Not only that, it made a left side, right side price time match. I wonder if it was exact. So that's red, or let's call it pink so you can see it differently. And this is going to be green. A new parallel, and we make that green because it's positive. And that takes us from there to the exact day. Today is the day of the breakout. And it's got a left side, right side price time match. Let's see. Oh, wow, look at that. Okay, so this is Maxwell House, and it should go to a leg D, and I'm suggesting the high today is at 1673. I don't know if that's the high for the day, or if that's a high, but whatever it is, it says that there's a chance that the 1690 to 1735 area is a target, and that should also be where it turns around and starts to want to retest some of the gains. Let's go to Brent in Martinez, California. Brent, how are you?
I'm doing just fantastic, Basil. How about you?
I'm doing well, thank you.
Very good. I would like if you could please look at oil on a daily and a weekly, if you could.
Okay, so what I did yesterday is I looked at the USO and I said, oh, wait a minute, let me just do this over again. The USO is the United States Oil Fund LP. And I did this, it was close to the end of the show, so I did it quite quickly, and I just want to double check. So 3614, 3614, 3614, 3621. So that's A, that's B, and what I said was, oh, I love this, A, B, C, and it made the peak D in a cup formation in the USO by going slightly higher, going to the D, and let me just draw this so that we can see what we're doing here. Where's the doji candle? Right there. Okay, give me 1 second. I'm close to finishing a little technical. There you go. Okay, so it went almost to the exact time on the right side. So there you go. Left side, right side, went to a D. And I was thinking that I didn't want to give too much of an opinion saying that it was getting a little toppy, but I had no signals at the time. Now, of course, you got a signal because it gapped down. It gapped down to 36.94, down 70 cents this morning. That's the USO after a peak D. Now, what I did do last night was I was looking at oil itself, the oil contract, and I decided because USO and crude oil match so precisely that I was going to use a phantom peak, a Chapman wave phantom peak on the high of the 9th of April at 102.82, and the next day was 102.84, 2 cents higher, but enough for me to say, you know what, there's a little wiggle in both the stochastic and the MACD at that particular point. I'm going to use it as a phantom peak, and I'm changing the color to say that's not correct, folks. I've made an educated guess, and therefore I wanted to treat it as matching the USO. So now, do you have any position at all in this?
I went short oil this morning, so I just was hoping that's the correct move.
Because what I did do yesterday is I grabbed the SCO. It's one of the few things I'm actually I'm very familiar with. I don't trade oil, but I'm almost always looking at the USO and looking at the I do look at them. I just don't trade them. But I always grab the SCO, which is the ProShares Ultra Short Dow Jones AIG crude oil contract. And in that, what I was looking at was not a capital, it's a lowercase a. Folks, in my work, I do lowercase letters on the way down, alphabetically to G. It doesn't have to always go to G. It can start all over again at a D or something like that. But I do, there are DE. So that was an E trough at the bottom, very strong leg A. Hey, so what instrument did you use to short?
I bought calls on the SCO you're just describing.
Oh, very good. So were you able to? You're in the money by a little bit now?
Yes.
Okay, because sometimes with the gap up and using options, you can get a price, but not necessarily the good price because they put the premium in pretty quickly. And I don't know, did they open it 2 minutes or 1 minute after the SCO opened, or did they wait a while longer?
They're a little tricky to trade. I've done quite a few of these now, and you just have to they'll normally have a fairly large spread on the options.
Yes.
The bid and the ask, and I'll put in at a level I think, to me, is a fair price, and you just have to let it sit there. And in my case, it didn't get filled immediately, but after about maybe 15, 20 minutes, they did fill it. So
you put it in, and it was below the price that they were asking. You just waited.
Yes.
Absolutely. I love that because that's, to me, that's the best way to do it. You have patience. If you don't get it, it doesn't really matter because at some point that premium will come to where you wanted it. But if you have the patience, they eventually come to you. They always want to get as much as they can in the way of options. And unless it's an aberration, unless you're really way, way, way out of line. But if it's kind of close, but it's more your price than theirs, they'll compromise. So actually, we've got a great show coming up with North Van Hooser. This is the option hour, and it's trade, think or swim. So that's coming up right after my show within about another 15 minutes or so. So that's a wonderful options show. So this is what I'm looking at. CSO has started a leg A. Other A's have failed after 3 bars. I'm looking at this and I'm saying if the USO, which has a stochastic of 87% and holding quite well, and the MACD is still good, is going to continue lower, then the 9-period moving average of 37.22 on the USO would be the level I'd be watching closely, because if it pops and it goes to 37.45 or 37.35, oh, that's the music for the break. Then I'd be looking at this and I'd say, okay, watch it closely because it could try to test the high. But I think you're in a very good position based on the, I want to look at, can you hold on?
Yes.
Okay, because I'd like to look at the weekly chart. This is going to be very interesting. I'll be back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back. So this is what I want you to talk about. In the USO, the weekly chart stopped dead at the 200-period exponential moving average. That was in leg B. Now, what we're looking at from yesterday to today, the USO has not made a new recovery high. I do not like peak A, very strong leg, and then a peak B with just a minor high to occur with a very sharp pullback. If the USO takes out 36.65 support on the weekly chart, even if it's intra-week and not at the close, that'll suggest that there's tremendous resistance, that we're stuck in a trading range in crude oil, and I just want to see if I can find the same thing in the crude oil chart on the weekly basis. Yeah, so weekly basis went to either a new G high in this contract, or it's an alternate count B. But it's the same application, because if crude oil, which is at 101.58, if crude oil slides, I got it, that's the K contract. All right, I've got the June. I don't know if the people trade the June. Anyway, I've got the June contract. If it breaks under 100.77 decisively, that would say, watch out, you're looking at some kind of a very strong resistance. You're in the right position. So yes, congratulations. You got a perfect move yesterday. I didn't have that indication other than to say it could do that because it was in peak D in the, in the USO, but in the crude oil contract, I had to use that alternate wave count. Beautiful, beautiful move you've got here. Here's my suggestion. On your position, if there is a bounce and that bounce takes out 102.54, I would lighten up on some of my position in the you probably get close to a little bit of a profit, if not break even on that on part of it. But that's where I'd be a little bit careful. You want to see tomorrow, you want to see it close, crude oil close near, this is the June contract, near the 101.60. If you're looking at the USO, do you use the USO as a benchmark?
I just use the crude oil contract itself.
Okay, so, and I'm looking at June. I don't know if people trade the June. But anyway, the June contract is 101.59. If that June contract does bounce, I'd lighten up a little bit. What you want to see is any bounce from here really shouldn't get more than 102.20. And then that's 120 minutes to confirm. Yeah, 120 minutes has 101.76 as the 200-period moving average, and it's below that. So you want to go into the body of this candle right here. Yep, there's the same thing. 102.20 to 102.32. That should be kind of the maximum of any bounce. And then it should take out today's low tomorrow. That would be fantastic for you. Wow, what that would do to the airlines. No wonder the transportation index is zipping up. Hey, I think you're in a great position. And I think as far as the levels to watch, those are the levels that I'd be watching.
Okay, I really appreciate it, your analysis, Basil. If I could just quickly, I don't know if Larry's listening, but if he is, I just wanted to extend from my family to his, my thoughts and prayers. I hope everything's good with them, and we definitely miss them. So,
yep, we all thank you very much. I do appreciate it, and I'm sure Larry will. Yes, we do, absolutely. If he's ailing, we want him well and right back here as soon as possible. Thank you so much for that.
Absolutely. Take care, Basil.
You too, Brand. Thank you for calling. So look at this, folks. The XAL, which is the airline index, is having a lovely day today. This is leg A up still in the daily, but it's a little toppy here in the week in the 120-minute chart. If I look at the IYT, so we're about to wrap up. Great show coming up. North Van Hooser. Stay tuned. But look at this all-time high in the IYT in the transportation index. This is very positive, and that makes it leg A, B. This is leg C in the weekly. Oh, my goodness. Who knew that would happen? Well, that's a very positive sign. So, folks, stay tuned. You got North coming up. Great shows all the day. Don't forget your Tiger Dollars. Don't forget my opening call. Check it out, front page of TFNN. I'll be back tomorrow. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.